Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today I'm here with Flavia with Fuente of BuildGroup. Flavia, thank you for joining us.
Thank you for having me.
So what was your background before investing in early stage companies?
So I know everybody says this, but I believe I have a fairly unique background. After graduating from UCLA, I moved to Texas to become a community organizer for the Sierra Club, which is the country's oldest and largest environmental organization. So it's been a while since I did that. Today I sit on the foundation board and I'm pretty involved locally. I'm super grateful for that experience because I learned a lot about leadership, organizational management, and I think most relevant to the field that I'm in today is how to punch above your weight with shoestring budgets. That's a good lesson from nonprofit world. After Sierra Club, I decided to go to business school here at the McCombs School of Business at UT. And I got into finance, got into investing, and after graduation, I became a fundamental equity stock picker, the employees' retirement system here in town, one of the pension funds. My focus was mostly on technology in Asia, a significant focus on technology supply chains. You can ask me about anything that goes into a cell phone, and I'll probably be able to name 3 Taiwanese companies that make that part. But I also had a big focus on corporate governance. And I really loved this work. I really miss it. But after 4 years of doing that, BuildGroup came knocking and I could not pass up the opportunity to work for BuildGroup. And when I tell my friends and family about BuildGroup, the first thing out of my mouth is that it is such a pleasure to be in an environment with this incredible culture of excellence. BuildGroup was founded by operators, the former leadership team at Rackspace, which includes Lanham Napier, who's the CEO for a long time, as well as Senior Vice Presidents Jim Curry and Clee Kleber. Our fourth partner, Gray Hall, joined this year and is a 2-time CEO. One of those times was with Alert Logic. So lots of experience with building organizations and executing at the highest level. And, definitely for me, the fact that Rackspace was on that best companies in America to work for list, I want to say 7 or 8 times in a row, was certainly a compelling reason to join the organization. I think most venture capital firms can plausibly claim offering expertise, network, strategic oversight, but I don't think all partners can claim having kind of been there, done that. Our team can speak for a very long time about everything they've learned from the trenches, and definitely not just the victories and consecutive 30-quarter growth episodes. They can also talk about terrible hires that they've made, launches that have failed, major incidents like bringing down the internet with a truck. But you'll have to attend Lanham's South by Southwest talk to hear more about that. And I just think that our team offers a degree of empathy that I believe is probably hard to find. And even if other firms do offer empathy and are operators, I would say that our empathy is literally built into our structure. BuildGroup is not incorporated as a fund. We're a holding company backed mostly, actually completely, by family money. So there's no forced exit timeline under which we need portfolio companies to operate. So the team founded BuildGroup because they wanted to create the investment firm that they wish had been around when they were looking for capital. When you're building a 10-year vision and you get funding from a 5-year vehicle, incentives aren't aligned. So as someone who has an interest in corporate governance and believes that it's important, that's what I mean when I say empathy is literally structural here.
Well, it's a great group to work with. I know the guys there at BuildGroup, and they've done fabulous work, and it sounds like you found the right place for yourself.
Yeah.
So as you go forward, what excites you right now? What gets you really jazzed up?
Well, I would say personally, 6 weeks ago, I had my first child that I baked myself. So that's a little exciting. Probably more accurate to say it was exciting. And I'm just bouncing around between a lot of emotions, including joy, confusion, and a little bit of fear, which is kind of an interesting parallel since a lot of entrepreneurs talk about having those same emotions when they build their ventures. And entrepreneurs talk about building their baby. And every entrepreneur who has struck out on their own has experienced the power of joy of totally going for it. But there's risks in starting the journey, and emotions like confusion and fear crop up. So right now, I'm excited to be in a position where I'm talking with entrepreneurs every day. I'm part of our sourcing team. It is my job to talk to people who are building things. And I love learning about what people are building. And even if we aren't a perfect fit at the end of the day, I hope that every time I interact with entrepreneurs that I'm at least helpful. And if I can't be helpful, I hope I'm at least kind and encouraging. We're trying to take fear out of the entrepreneurial equation here at Build Group and be as encouraging as possible. Of course, we're focused on our portfolio companies and optimizing operations, delivering permanent capital, and thinking about what a modern business model needs to succeed today. And that's exciting work.
Well, great. Well, congratulations on the new addition to your family. And it sounds like you have
Thank
a lot
you.
to be excited about. And again, congratulations. So we have a lot of investors that listen. And so we always want to share wisdom with them. What's your advice for people investing in startups? What should they think of first before they write that check?
Well, I think, and I come by this advice fairly honestly as someone who has been in private markets for less than a year. It's an interesting change for me because I went from a place where I was looking at large, multi-billion dollar publicly traded companies, and it's a very impersonal assessment. I can meet with management teams. I had that privilege, but I was mostly relying on a significant amount of data that's available and research and technical expertise at my fingertips. I think, when we're, at least at the companies that we look at here at Build Group, it's truly incredible how much the leadership team matters. Revenues are early, products are early, markets are early, and I'm in the room with experienced operators and former CEOs, and hearing their assessments of leadership teams has been very fascinating. And there are right leaders for different stages of a company. The right leader in an early pre-revenue stage is not the same person who's going to take the company public necessarily. And so I think understanding where you want to play in terms of where a company is in its life cycle, there's a lot going on there as far as thinking about a leadership team. And to that effect, it's wise to participate with people you know and trust, and certainly need some kind of knowledge and expertise in the industry and sector. I think baseline advice like this goes unheard most of the time because people that have the opportunity to invest in private markets have typically accumulated a lot of wealth in one way or another and have their own criteria for investing and appetite for risk. But the way I see it, and I think the way Build Group sees it, is if you're making investments in startups, focus on their current foundation as much as their vision. Start with people, but more and more, and I can talk about this a little more later, I think you need to understand, particularly in software, what data they're looking at, how they're accumulating it, and especially given everything going on right now, and understand their strategy and plan to activate that data in ways that help them build their business, scale it through partnerships and other networks.
That sounds great. So a few moments ago, you talked about the risks startups take in running a business that's brand new. What's your advice for people that are running startups? What would you tell them to think about before they begin their next startup?
So I will speak as someone whose expertise is mostly in thinking about capital and financial markets. I can't tell you how to build your product. I can't tell you how to necessarily build your organization. But I will tell you, as someone who's sitting in an investor's seat, spend time thinking about different kinds of capital and understand what kinds of investors exist and what their interests and incentives are. I mentioned earlier that our team, when they were at Rackspace, were trying to build a 10-year vision, and their investors were operating on 5-year funds. Those are incentives that clash, and you'll find yourself having to make decisions on a 5-year timeline instead of a 10-year timeline. So you want to find someone whose interests, incentives, and timeline aligns with yours, so that way you can make the decisions that align with your vision. So appreciate governance. It's not the sexiest of topics. I'm sure most people would rather spend time speaking to customers and digging in on their product, but think about the foundation, the organizational foundation of your company, and figure out who is the right pool of capital to go along for the ride. And this is also as simple as understanding if you're looking for a $2 million check, you probably shouldn't go to a $300 million fund. Investors are running businesses as well. And if you think about how much time we have and how much time is spent processing deals, there are scaling issues there. Really, really big investors, take, for example, the biggest in town, the teacher retirement system, a pool of over like 160, 170 billion dollars. They have to scale their operations. They don't look at opportunities less than $100 million, really. And if they want to, they delegate that to a different investor who can then do that investing for them. So if you're very, very early stage, you need to be talking to angels and seed funds. If you're a little later, you should be talking to us, and so on and so forth. Just because there's a big pile of money doesn't mean it is necessarily right for you. So do your due diligence before somebody writes you a check. As the saying goes, there's definitely no such thing as a free breakfast taco.
Well said. So BuildGroup focuses on tech software for investments. How do you see the state of investing in tech software today? How's that industry evolving and changing?
So this is kind of a adjacent but still relevant observation. And I'll speak to it just because it's fun and it's in the headlines. But WeWork was a thing, and it got a lot of attention, or it got the attention it deserved. But one of my favorite financial columnists is Matt Levine at Bloomberg. If you don't subscribe, I highly recommend subscribing to Money Stuff. You'll learn a lot, you'll laugh a lot, and you'll be a dazzling conversationalist at your next dinner party. But he made some outstanding points recently about WeWork and SoftBank. And in addition to kind of dunking on Adam Newman, which I admit I very much enjoyed, he asked several questions, including, will the WeWork debacle cause a change in the funding landscape of private markets, or is this a one-off? And SoftBank is a huge player. I think any adjustments it makes in how it evaluates investments, and they play kind of broadly in the tech sphere, but any adjustments it makes in how it evaluates companies should have pretty big effects broadly. And I'm waiting for those ripples to come through. But that includes maybe their deliberations will now include thinking about things like gross margin and profitability. And the running theme in my conversation here today with you all is governance. So, I mentioned earlier, I used to do some governance work in equities, and I actually give some credence to this argument that entrepreneurs and founders should retain significant control to focus on the long term, as public markets are notoriously short-termist. I totally see and get that argument. I remember seeing some research indicating that in Europe, companies with significant family ownership performed those that did not. So kind of a parallel there. But so I don't think these kinds of things are totally egregious, but there's certainly a double-edged sword, because if you have long-term control in the hands of someone excellent, fantastic. And sometimes it's somebody less than fantastic, and then you have a problem. But Levine's point was more that, and I'll quote him here, that there's basically one less giant pile of money, and truly giant, that will no longer be rewarding vintage unicorn excess. And I think investors like us at BuildGroup will feel less pressure to compete with high valuations, generous terms. To be clear, we at BuildGroup have never been interested in chasing stuff like that. And we've so far in our process self-selected to engage with companies who weren't interested in having an investor like SoftBank. But perhaps now companies and founders who thought they wanted an investor like SoftBank will reevaluate what they're really looking for and possibly give an organization like us a ring. So as far as industry evolving, that's the biggest thing that I see happening right now is, well, perhaps going to happen right now is the ripple effects from WeWork's experience.
Well, that's a good point, a very timely one too. It seems like we're all going to go back to just building good businesses and not getting caught up into the unicorn hype and media brigade that goes on with it. So looking forward to that aspect of it. So in that vein, what is BuildGroup's investment thesis? What do you guys look for in a startup before you engage with it?
Definitely. So at BuildGroup, we are interested in modern business models. And I don't think any of what I'm about to say will be totally mind-blowing, but we're trying to present it in a way such that it's helpful if you're an entrepreneur or founder. We think this stuff works, and perhaps it can work for you. So first and foremost, for us, a modern business model puts data at the core of their business strategy. So either you're generating some kind of proprietary data and or integrating multiple data sources to create that powerful data, looking for companies that are looking to construct open data networks or kind of self-reinforcing data-driven value loops in their businesses. And there's several examples of that out there. But within these data networks, a modern business will use analytics and data science. Of course, our big players here, machine learning and artificial intelligence, to learn about product development, learn about customers, influencers, employees, use these learnings to guide outcomes and deliver recommendations to optimize the business. So a modern business model will deliberately create a data and technology stack that scales to support very fast growth over the long term. And that is one core component of our investment thesis. And I would say, beyond that, we are looking for business models that focus on subscriptions and transactions, sometimes one, sometimes the other, sometimes both. But frequently, we're interested in places that are conducive to that data collection that I talked about earlier. And marketplaces are kind of natural places of data aggregation, multi-sided marketplaces, matching spaces where some kind of matching is happening, sorting, selection. Sometimes it's difficult to generate both subscription and transaction revenue, but when we find it, we love to see it.
That's great. Do you have a startup example that you think fits that thesis well that you can talk about?
Yeah, I think we're early days at BuildGroup. We're, I don't think, even a third of the way yet in deploying our fund, but I think within the past year, the examples that stand out are VidMod, which is a New York-based company. They started out building a marketplace that connected marketers and professional video editors. There's still a component of that, but the company has also built a broader platform for video advertising. And marketers can find editors, animators, graphic designers to create smaller, quicker ads that are delivered to partners like Facebook, Google, YouTube, Instagram, so on and so forth. And so there's kind of this marketplace network component, and they also use data, right, to make the advertising more effective. So the result is that the ads improve over time through this process that happens iteratively of creating and learning and creating and learning. So VidMob is a great example. The other one that's an interesting example is Xmode, where we had a smaller investment out of Virginia. They're in the location tracking business with your permission, of course, but that also is a two-sided market. So application developers can generate some revenue by selling location data to Xmode, and Xmode can analyze and package that data to drive better decision-making for their customers. So marketplace and data science at work there as well.
Those are good examples. So in the tech software space, what are the challenges startups face in running their business? Is there any regulatory or technical or market issues that really overarch the others?
Well, there's some obvious ones I won't spend too much time on, but politically, there's more and more interest in data management and data privacy. There's significant amount happening there. And I will by no means shed any new light on there. But one thing that I have been studying recently as we've scoured for new opportunities, I've been thinking about the cold start issue that plagues a lot of companies who would like to build businesses that are data science focused, that have data science at their core. And the cold start challenge is kind of what it sounds like is, you'd like to develop something and develop something based on an accumulation of data and get some learning out of it and optimize something, but you literally just don't have enough data. And I think there's a world out there in which we have tech giants who I would call the haves, and they have a lot of data to look at and analyze, and they are exactly whom you would suspect. Facebook and Google, just by virtue of having been in business as long as they have a significant head start in data accumulation. I would also say Tesla has a significant head start in data accumulation, just time spent on the road by all of their vehicles, looking around and learning how to self-drive. Hopefully, they are definitely in the have category, and anybody new, frankly, is in the have not. If you want to get into a business relevant to machine learning, I think you need a quality data set, and if you don't have it, just getting it is a significant problem. So companies that are tackling this issue of providing robust data sets, scraping the web to build appropriate data sets is really fascinating. And I've spent my maternity leave reading the, I believe, seminal data science book, The Master Algorithm. And I highly recommend it to anybody out there interested in these types of issues.
That sounds great. So what are the current hot topics inside the tech software space? Are there any subsectors or applications that are standing out from the others in your mind?
Subsectors that are standing out. Well, I think there are some sectors that naturally lend themselves towards data science solutions and applying kind of predictive analysis. One that I like to spend a lot of time looking at is supply chain related businesses, anything where there's a sequence and a beginning to an end kind of order of operations. That's kind of a great place to apply data science. And I think in the global age of e-commerce and frankly, global supply chains, anywhere where we can get smarter and more efficient, whether it's at a port or at a warehouse or in trucking and shipping, I think those are really interesting, probably valuable places to be applying technological solutions. So that's one that I like to read about and think about and hopefully find an opportunity soon.
Well, that's great. Well, in the last few minutes that we have, what else should we cover that we haven't?
Sure. So we recently seeded a company, BuildGroup Data Systems, in order to use data to drive our own process. So obviously, throughout this conversation, I've talked a lot about it, and we think data is key to building the modern enterprise. So we figured we needed to apply it to our own business as well. And it started out as an internal project, but we decided that we wanted to open this system to other investors and, most importantly, to entrepreneurs in the hopes of improving the dynamics of the overall private investment market. And what I mean by that is, so I come from the public equity world, and there's obviously tons of transparency there, right? There's piles of publicly available information, filings, it's organized, you can download it, you can analyze it. So machine-driven quantitative investing is just absolutely huge these days in public markets, and frankly, putting fundamental analysts like I was out of business. So private markets, on the other hand, by definition, are more opaque. There's just less information out there. And if you're trying to get funded, it's pretty clubby and frequently about what network you are or are not plugged into. So this is an effort to poke at that and see if we can make the market somewhat more transparent. I know I said there isn't as much data as public markets, but there isn't no data out there about private companies. There's data. It just needs to be analyzed and processed, ideally by the data science wizards at BuildGroup Data Systems. And hopefully with this platform that we're building, we can match the right investors to the right companies. So for BuildGroup, we're looking for modern business models. If you are a CPG fund, you will be matched with the appropriately sized CPG opportunities. And investors have different theses, and entrepreneurs should be looking for the right investors. And as I mentioned earlier, the right type of capital that maximizes incentive alignment. I think that's really important. So I describe this as kind of a match.com for the private investing world when I explain this to friends of mine who are not in the biz. And yeah, it's a recent venture. We're really excited about it. If you are an investor or a entrepreneur, please check it out. And we are hoping to roll something out next year and bring more transparency to private markets. So that is, I think, the last thing that I was hoping to talk about with you, Hall.
Well, that's great. Looking forward to seeing that program roll out and see how it works. How best for listeners to get back in touch with you?
So feel free to drop me a line at Flavia@buildgroup.com. And I'm always checking my LinkedIn. So feel free to connect and reach out to me there.
Well, we'll put those in the show notes. Thank you for joining us today and hope to have you back for a follow-up soon.
Wonderful. Thank you all.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.